And let's kick things off with the largest company on our exchange, Commonwealth Bank of Australia, commonly known as CBA. Let us know what they had their reports on Tuesday.
Tuesday, correct. They reported on Tuesday. And as Louis said, all about expectations. So they reported cash profit in the year ending June 30 rose 11% to 9.6 billion Australian dollars. Quite positive. And again, they sort of came up with some commentary on this. This was buoyed by growth in home and business lending and also lower bad debts. So I think at this point, obviously, throughout that financial year, interest rates were still very, very low. So I guess they reaped the benefits of that. But again, they also upped their dividend as well, $2.10 a share fully franked, which is quite positive. But both of these did miss expectations, so they have dropped. They were down about 2.3% for the week, which, again, had a bit of an impact pulling our index down, especially today. Their expectations were 9.7 billion, sorry. So they were slightly lower than that, not by much. And their DPS, dividend per share, was expected at $2.14. So, again, slightly below that. So, again, I think the outlook provided for them, not the most positive, which I think, again, the expectations are important, but also the guidance provided is also extremely important on the reaction from the market, which is why we did see them drop a little bit this week. And we did see a comment from their CEO, Matt Comyn. He said, growth in new mortgages and business lending will slow abruptly later this year as the impact of higher rates is felt unevenly across the economy. So I think broadly, I guess, not the most positive. We've seen a lot of downgrades for CBA over the last 2 weeks. They're trading about exactly $100 a share today, and the downgrades are putting them anywhere from 70 to 80. So pretty big downgrades. And not the most positive outlook.
A bit of a side note, I saw Matt Comyn down at Coogee Beach one Sunday morning, but I didn't want to say hi to him in his budgies, you know.
Yeah.
But that was a bit awkward.
Fair enough. Let's go into another big behemoth in the telco space. Telstra, I believe, reported this week as well. Dr. Adam Shidakowski, you've got some analysis on that?
Yeah, absolutely. Yeah. So, they did report as well. And I do have a chart here I just wanted to share with you with some of the key statistics. So let's start with the top. So overall, their net profits did actually fell, but when you look specifically at their mobile services and the plans they're providing there, they actually had a positive result on that. So that went up, as you can see on the top left, plus 2.9%. So basically, some of the issues they have is the non-mobile, some of the fixed or a bundle services where they saw a pullback that overall contributed to a negative result in the earnings. So you can see that at the bottom right. So that is the annual net profits, and you can see that is at 1.8 billion. So that is a decline of 4.6%. So it is. In line with expectations, but still, nevertheless, it is a little bit of a negative result. What was positive was their very optimistic announcements in regards to dividends. They did hike dividends. They hiked it from 8 cents to 8.5 cents per share. So fully franked dividends as well. So that's now adds to, including a special dividend they had for the year of 3 cents. That adds now all together to 16.5 dividends, which is then a 3.1% increase in dividends as well. So that's very good to see as well. So before tax earnings, they did drop 5%. So not as strong result as they would like to, I guess. But let me actually give you an announcement from the chief executive, so Andy Pan, and he was saying, So he was saying, we could have not foreseen that COVID and the other economic, political and social changes that have unfolded. So that's kind of what he was saying. But he was still saying strong performance of core business.
Very good. Now, if our viewers rewind their tapes from about 3 months ago, maybe, or a month ago, you would have seen us in our hot opportunity section mention a business called REA Group and peg it as a very, very hot buy. Now, that has come out with its report, and I do know that it was up very significantly. Give us some analysis on that, Mr. Mossman, and keep mentioning to everybody that we did mention it 2 or 3 months ago.
Well, we did actually mention this stock 2 or 3 months ago, and it's actually even before this report came out, they did perform very well. They've been in a nice upward trend, bouncing off the bottom and making higher highs, higher lows, all those nice technical things. But, it really comes down to what they're doing. They made 26% more revenue in this financial year than they did previously, and EBITDA was up 17% as well. Market loved that. They were up 6%. Now, what's this off the back of? It's off the back of stronger listings across all markets in Australia. Now, you might think the property market's easing off. What does this mean for REA? Well, people still need to sell properties and they still need to list them somewhere. And listing demand was up 11% over the full financial year, even while the property market was pulling back towards the tail end of that. Now, this is a comment is
there an argument to be said that people are concerned that they're not going to be able to service their mortgages, so therefore they are selling for that reason? Or?
Exactly right. I mean, the biggest issue that people are having is, and I've been speaking to people in property and buyers agents, they say, I was speaking to a buyer's agent, he's saying the harder job right now is to find buyers rather than to find sellers. So when you've got that mismatch between the supply and demand of property, REA is on the better side of that, where the sellers are listing their property. So you are perfectly correct. And a quote from their statement, their results, realestate.com has the largest and most engaged audience, with more Australians than ever engaging with our site when seeking to transact property. They've got a massive market share. They're low in their range still, and I think they're a really strong, profitable business for the next 5, 10, 15 years. And if they have another little pullback, there would definitely be an entry point here in the short term as well.
Very good, very good. And listen, another one that we probably mentioned not so long ago, now correct if I'm wrong, gentlemen, but it was the stock ResMed, the code RMD. I think we mentioned that one relatively recently, maybe a month ago or so. That's had an announcement today. Once again, that is done splendidly. Very, very nice. Give us some analysis on that, Mr. Howie.
Yeah, again, I think a business that did slightly miss the ball. I think expectations were very optimistic for this business. They had a pretty positive year, I guess, across the board. They expanded their operation to Germany. They acquired a business there, looking to move into the big private sector, private hospital sector in Germany as well. So they've expanded a lot this year, which is quite positive. And actually also provided some positive comments, which I'll get to in a minute. But they grew net income by 2/3, which was US dollars 779.4 million. They were supposed to be at 785. So just shy of that when you look at, I guess, how broadly large that number is. But still slightly shy of the ball there. And that was on a 12% increase in revenue, which was at 3.6 billion US. So again, still growing very, very quickly, maybe not as quick as people thought, but I still think it is a business that is making all the right moves at the moment in terms of their growth and their strategy moving forward. A comment from Mick Farrell, who is their chief executive. He said, our fourth quarter and full year fiscal 2022 results demonstrate strong growth and ResMed's market leadership, which we all know ResMed is a massive player in that sector. Mm-hmm. Probably the biggest. I would say there's not too much competition for them at the moment, maybe Fisher and Paykel Healthcare. But again, I think they dropped about 3.5% today because they didn't provide any guidance moving forward into 2023. I think they had some conversations with the executive team about where their strategy will be moving forward, so they haven't said anything as of yet, which is why the market, I think, did, I guess, not react as positively to that today. But again, I think they did mention that a key factor in ResMed's 2023 performance will be its ability to rectify the component supply shortages. So supply is going to be a big impact, not on this business, but on a lot of businesses on our index. And I think that is something, again, that out of that report, the market sort of took quite poorly as well. So again, not the most positive result, but again, they are still growing and they are still expanding. So I think if you look at the way that they're moving as well with regards to the market, and as Louis mentioned, that I guess the bond market is really indicating a recession. It is a business that, I guess, traditionally could do well through that period too.
Very good, very good. And so let's just go, it's not an announcement, well, I suppose it's an announcement, but it's not earnings or anything like that, but let's talk about the Oz Minerals BHP takeover offer. Now, I'll go over to Dr. Adam Shedakowski. I know you've been looking at this quite vigorously over the week. Care to shed some light?
Yeah, that was big news. And so basically, I was an unsolidated, conditional, and non-binding proposal from BHP to purchase shares of OZ Minerals. And so quite significant. Just to look, when you look at the price, before that announcement, it was at 18.9, and now it is at 25.7. So it's more than a 50% jump, so quite significant. And what they did is said, no, thank you, we are not interested because we think we are...
Oz Minerals said, no, thank you, we're not interested.
Yeah, so I mean, I will provide official...
maybe not in those exact words, paraphrasing slightly.
Yeah, so actually, let me give...
sent a text.
Yeah, maybe.
Sorry, mate, not interested.
So this is a quote from the board. One of the arguments they are saying here, and they are saying, we are mining materials that are in strong demand for global electrification and decarbonization. Yep. Yeah, thank you. And we have a long life resource and reserve base. So they have actually a lot of resources. And so if you look even globally, they are very, very strong in terms of the reserves they have. So for copper, for example, so I'm not surprised somehow that BHP maybe was looking into putting an offer there, because they got some money from the other deal in the past, right?
Talk about a sneaky deal from BHP though. Wait till the price of copper just tanks and go, you're not worth that much. We'll snap you up for this much. And then Oz Minerals are like, no.
Yeah.
Probably.
Yeah.
Yeah, I mean it's so they
Merger
offered,
and acquisition space, it's a lucrative industry, all right?
yeah, they offered 25 and now it's above that. So that's very interesting and certainly indicating that I think there's also a lot of prospects in this kind of sector.
Yeah.